And today we're talking about leasing or buying a car. Okay. Of course, I will touch on tax side of it, right? So how leasing a car and buying a car, how that is different on the tax side of world. But of course, it is not about lifestyles. There are people just like to get new cars every couple years. So they better lease a car because otherwise, you're just kind of wasting your money buying a car and then sell it, buy a new one. No, if you're the kind of person, your lifestyle is about getting into new cars, always drive the first one come out of the market. And this is not a webinar for you. You just go with your lifestyle because of course, we like to tax plan everything, but you don't want to dictate your life simply by what the tax dollar goes. But of course, that's not all true for some of the people. And I know that in different life stage, maybe people thinking differently. When you are young and establishing, you want to make sure that your tax is efficient. And if leasing car is giving you more benefit in your business, you'll do that instead of buying. So let's just dive into that. In the end, it is your lifestyle decision. And maybe saving taxes is your lifestyle, then we go for it, right? So let's share screen on this one. Of course, all the webinar content is free and anyone, anybody, anytime can listen to it and learn from it. But again, take with grain of salt. Even if we made a mistake, let's say things changed and we were giving, our information was not updated and we don't go back to change those videos because there's so many and we just continue to improve ourselves and continue to give you new knowledge. So getting a car, lease a car or buy a car, right? So I want to go with the lease first because buying a car is really kind of similar in business. If you buy a car, you buy an asset, right? So you basically, if the car is for your business, you're buying an asset. But in the leasing side, there's actually have two different ways of getting the car. So one of the lease car is called rent. So it's literally like you're renting the car. So you lease the car and it's treated like a rent. So in business, if the car is 100% used for business, then you're literally booking them under rent expense. Okay, so that's one type of lease. And then this type of lease, and ordinarily speaking, it is more of a, you lease it, but there is no condition attached to it. You may renew your leases with a new equipment, but there is nothing like, oh, you pay $1 more after 3 years, and then you can have this property, this car be yours. So that is not the rent type of lease. That lease is what we call that capital lease because it's an asset lease. And so it is a lease that treated like your asset. So those are two different type of leases. And then you probably ask me that, well, so what do you mean by asset type of lease? So this is what I mean. And when you have a lease with a conditional sales inside, that typically is regarded that the lease is your asset. And you're not really paying rent. You're actually paying something, and inside of that total payment, a portion went into equity. A portion went into the title, a portion a little too high than your regular renting. Okay, just like we rent a car. If you go to the airport, you rent a car, you know how much that is. But leasing a car is kind of different, right? The amount is more. So what are the more? And are you, because the car is an expensive car, that's why you pay more, or that more represents the equity, represents the title. So this is where we listed when at least part of the payment are applied towards to the purchase or entitle the taxpayer to buy the car, the property, under more advantage terms. So if that is happening, then you are not working with operational lease. You're working with something called capital lease, and it is really a lease that you should put on your asset side. All right, so now we said that, then I want to go into a real example because numbers always gonna make you understand the concept a little better. So this is called tax deduction with a leased vehicle, and the depreciation, the cost of the vehicle, depreciate the cost of vehicle at once or over the course of its useful lifespan, and additional deduction on driving costs such as gasoline, insurance, repairs, maintenance, and a car wash. So this is your leased vehicle. Okay, when you have a leased vehicle and it is actually, see the example is right here. The company B purchased a new vehicle at 20,000. Company B and estimated to pay 1,500 in gas and the 2,000 in maintenance. And because this is a leased vehicle with condition to own, so that deduction is equals to what? Equals to the 20,000 plus the 1,500 plus the 2,000. See, this is where when you lease a vehicle that is actually with a condition you own, and then you actually take the whole lease amount plus the cost, that will become your deduction. And the deduction with a normal lease are the one that like a rent. So that happened, number one, in order you to deduct that, that vehicle has to be 50% more in business purpose. So you have to be using that for a business drive, right? Then you can deduct the lease payment. So let's say if you do that for $200 a month, then you have 2,400 total to deduct at the end of the year. And if you have other expenses, for example, you parking expense, for example, gas expense, all of these ones, you can add the actual expenses together and deduct it. If you have insurance for that vehicle, of course, you can deduct it because it is more than 50% of business use. Then your question might be, well, Ying, and if I just use this vehicle half for personal, half for business, and what do I do? You can still deduct these expenses, but prorate that for business portion only. So instead of deducting the $200 total, you deduct 100 because you're really leasing that vehicle. Part of it is for your business. But earlier when we talk about leasing a vehicle and you own it with a condition to own, and remember that deduction was the whole vehicle with all the expenses. And in that case, that need to be under your business title, right? So let's say if you lease the vehicle under Community CPA, then Community CPA treat that vehicle as a company car, then that is how it need to be deducted. But what if you say, well, I leased a vehicle and to own it for $1, I'm going to own it after 5 years paying the lease payment, but I leased it under my personal name because the dealer would not allow me to lease it under the company name. This is where when you can always declare that, well, I use that 100% for business. But if you are under audit by IRS, the auditors would not be able to would not be easily taking that into business because the title is under you. So you would have to prove that, otherwise to prove with other means to say that it is 100% for business. And for example, maybe you bought the vehicle, but it's one of your employee driving it. And the insurance was covered under company name. So if you have stuff like that to prove, then yes, and that would be reasonable for the auditor to see that you have the necessary, you have the necessity, you need that for business, it's a necessity and is reasonable, and you can prove that it is for business use 100%, then yes, I can see the difference in under your name to getting that lease, but you can still deduct it under business, right? And now let's look at this example. So this is the company A leases car with 36 months term and no option to buy at the end of the lease term. According to the lease agreement, the company A has to pay 500 monthly payment until the end of the lease term. Company A also drive about 12,000 miles per year and spend about 1,500 in gas per year. So this deduction is a normal lease. It is like a rent lease, right? So then the lease deduction, it is your 500 times 12 plus your 1,500. So right here, this is your deduction. And, I also want to point out here is that, now you are saying that, well, I'm not sure about that, Ying, because I drive so many miles. And if I use the standard mileage rate times my miles, my number is bigger. So this is where you want to make a judgment. So when you rent this vehicle and when you lease this vehicle under normal lease, and you need to decide that is leased under your personal name, is under company's name, right? If it is under company's name, then it is very natural to take the monthly payment plus all of the things related to the car wash, car park, and gas and repair, whatever you are expense, it belongs to the business expense. But if it is your lease, let's say if the lease is really cheap, and you feel it's worth it, and I'm just going to do it under my personal name. I drive most of it for my personal. I only going to charge the company and for the mileage I drive. Okay, for the mileage I drive on the vehicle. If that is the case, you are using personal vehicle for business reason, for business purposes, then you will be booking the mileage, use the standard rate to do, and you don't bother with the insurance, car wash and gas and the lease payment. You don't bother with these anymore. You strictly using the mileage with your rate. So now here I want to tell you, for the same vehicle, for that particular vehicle, and you cannot switch between standard mileage, actual expenses, just depends, right? And you need to stick with the first year when you put your vehicle on your book for IRS, you use the standard mileage, you always use standard mileage. But if you want to change to actual for whatever reason, then you need to sell your vehicle to the company and then leaving that under company asset book, then start doing actual deduction. But you cannot under the same ownership and switching back and forth between the two methods, right? So that is really important to know, and because we have seen people and not knowing, so they choose which one is better in the year, then they plug on the taxes. And I mean, the audit has a 3-year statutory limitation, right? So we just filed 2020. So your 2020, 19, and 18 now is under audit active period. Then your 17 is rolling off because they're out of statutory time. And for those clients who are doing it wrong, and when they come and they were like, well, same car in 2017, it was actual expenses, but we made it standard deduction, the standard using mileage method, we used it for 18, 19, 20. And of course that's wrong, but because it's outside of the audit statutory limitation, there really there's no point for us to go back to bring your 17 in, make changes for that correction, may not even generate that much of a tax differences anyway. So, what you want to do is to know that which is the active audit period. If you made a mistake and that is significant for your tax dollars, then obviously you change it. Otherwise, just know that with the standard mileage method versus actual expense method, you choose one for that one vehicle in the beginning of the life, and that's it. Okay, it will go for that for the rest of the vehicle's life with you. Of course, you can sell it to your business, then start something else. Now let's look at pros and cons for leasing a car. So I have like 8 points here. A lot of them are common sense, but people do ask for that. So we want to quickly run that with you. So number one, the monthly payment are typically lower than if you were buying a car. So let's say if you buy a brand new car and you do your mortgage it, you do a car loan, and so that monthly payment is typically lower when you lease a car because you don't take the car, you don't have that car title, right? So the people take the car back. So the dealer take the car back. So that payment is typically lower. And the down payment requirement is also lower because for leased car, not like buying a car, and you don't need a lot of down payment. And you don't have to pay a upfront sales tax as well. When you buy that car, and you know how you register that car, that could be thousand in Iowa is about, for a decent car, you would pay about $1,900, close to $2,000 on the sales tax. But if you lease it, it doesn't come that way, right? It's coming monthly, little by little, included that amount. So that's what they say about the upfront sales tax stuff. And you would never have the upside down value issue because when you buy a car, and as soon as you take into your name, the car is already depreciated down to some value. You couldn't really, even if you buy a car for 100,000 day one, on day two, you sell it back, it's already not 100,000, it's down to 50,000, right? So that's what we are talking about. The value upside down. So when you lease the car, such a thing doesn't happen to you. But when you buy a car, it happens to you. You can't resell it for the price you bought it. So that's what they're talking about, upside down in car value. And there's a good chance that the maintenance also included in the leased car. And I know that, when I went to this car dealership, if you bought the car, when they do the oil change, they don't wash your car. But if you lease the car, when you do oil change, they wash the car for you. So that's a different treatment because the dealers are treating the car as their vehicle because you just lease it. But if you bought it, it's yours. They don't care anymore. And the new car are typically covered with the manufacturer's warranty. So you shouldn't have to pay for expensive repairs. This is for the leased car, it's the same thing. If it is having problem, the leased car dealers, they take it back. So you don't have that expense. You don't have to, this is the other point is kind of true. And you don't get the pushy salesperson, trying to push you to buy, and you just lease a car and you kind of get away from that. And you can always drive a new car. And that's really, that last point is actually really a lifestyle issue. And I know clients who just don't really never buy a car, always lease because they always wanted the best car, the new one most advanced. Why not? Technology changing so fast. So the car gadgets are changing so fast too. If you really buy a car and drive for 10 years, by the end of 10 years, you already are so behind on the technology side. I don't think the satellite in the sky even recognize what the thing is moving. So really, it doesn't make any sense anymore to really buy a car, keep it for 10 years. If you buy a car, keep it for 5 years, that's the longest. Because the technology on the car is really important. It can save lives when you have the most advanced technology, right? So I'm sort of talking to you as if I want you to lease the car. That's actually kind of my own mindset. I don't see values in buying a car, driving for 10 years. And but I used to be that way when I was in my 20s. So the disadvantage of leasing a car, of course, you never own it. And when you lease, and there's always caveat about how much mileage you can put on there. If you go over that, it can be expensive, right? And you can't modify your car, and it is hard to get out of the lease for sure. And then you really, when you lease a car, and they also check your credit, not like if you buy a car and you don't have a car loan, you just buy a car, it has nothing to do with your credit report. And you cannot depreciate the regular leased car, right? Remember, we said that is treated like a rent. And unless you're doing capital lease and you are actually have that condition in your lease agreement, right? And then you stuck with your method of expense, whether it's a standard mileage, and you have to keep the same method every year. You cannot change that, right? So buying a car. So what's the advantage of buying a car? Of course, you own the car, right? And you own the car, and the car is yours, and you can sell it anytime you want it. And you can also don't care about the mileage you're driving. It's your car, and then you can change the car any way you want it. And if you bought the car to your company and you depreciate the vehicle as an asset, right? As a company car. So that is where, buying a car is just simple. But of course, there's also downside of the buying car. And typically you pay upfront, right? If you have a car loan, you pay upfront down payment. And then you have this sales tax to pay and title fees to pay. And the loan payment, typically the rate is the loan payment is typically less advantage than the lease payment you're paying, because the loan, you're borrowing money, and the lease payment, they have the car, so they typically would be lower, unless you're doing a lease payment with the title following through. Then of course it will be different. And then you have this manufacturing warranty that with your purchase that you can buy, and you can buy, or you have it naturally if you're driving certain mileage. And typically the dealership doesn't cover vehicle maintenance costs when you purchase a vehicle. So this is really this is something that you want to consider. This is where I always tell clients that if you buy a used car for your business, and you want to use actual method, you want to just deduct the real expenses because your repair may hit you in 1 year, and it doesn't matter what you do, you cannot make it up. So if you buy a used vehicle that possibly with a repair, and then you want to use it for business, make sure you use actual method instead of standard mileage. And if you depreciate the vehicle completely, you'll probably owe a recapture taxes. This is related to the asset. When we put asset on the business, you know how you depreciate that out throughout the year and you write them off, right? But when you sell this asset, you had a gain, and they want the recapture is related to the the depreciation you had from the past. They recapture that back as an ordinary income. This is more on the depreciation side of the knowledge. But for you to remember that buying a car and keeping a car to your company book, and you go through the asset depreciation process. All right. So when you buy a car, and think about mileage. Think about mileage, because if it is too high of a mileage, don't lease it, because that would cost you a lot. And then that will give you a reason to switch between whether to lease or to buy, right? And how long you keep the car is also a very important consideration. And plan to get a new car every 3-4 years, or you just gonna be stuck in this car for the rest of your life. And that's just that's a different mindset. And I say that without technology, I think the car can last forever. There's no need to get into a new car, your car's still working. But if we consider technology, that is a different reason to change the car very often. So how much do you want to spend on your monthly payment? That's a cash flow consideration. So you consider your miles driving, you consider your cash flow, and then you consider how long you want to keep this car. So that would give you a decision in terms of how you want to obtain this car, buy or lease. I hope this gives you some good knowledge and a good way of looking at things differently. And this is our webinar for Tuesday, and you can always email Catherine at communitycpa.com to give her topics that you'd like to hear. So that's what we are gathering here to talk to give you the updated knowledge. And then you can also call our office, and we open Monday to Saturday, 6 days a week, and from 8:30 to 5:30. And of course, on internet, everything open all the time, 24/7. So check on to our YouTube channel, and don't be shy to call us, and we're here to help you. And appreciate your time, and thank you very much for joining me today.